Well, I'm going to offer a suggestion that the fiscal cliff may not be as much as a hard cliff, but a series of events. And what it's really going to be is a series of events to actually decline the dollar. Not to oblivion, but that is the thing that's going to give more than anything, and more than likely the equities in the American markets, the Dow and the S&P, but not gold. Not gold. That's the thing. That's where, like, it's not going to go to the moon right away, but it's going to start. It's going to continue moving up. And you know, in retrospect, if you look back a few years ago, I remember telling people, "Yeah, gold hit $1,000 an ounce," and they're like, "Oh my God!" And I think it retraced down to 8 something. But people were, you know, if you got that dollar, you got that gold at $1,000 an ounce, and it went back to 850, people would have been saying, "You're such an idiot. You're such an idiot." But you know, you look at our worst pullback that happened in 2011, it was at 1522. So even if you got it at $1,000 an ounce a few years ago, you're up 50%. Or in reality, the dollar's down that much, because I think gold is probably a closer reflection of what the real inflation rate is more than anything. You know, you look at shadow stats and you see the way the government used to calculate things. But the price of gold is actually very close, I think, in reality to the inflation rate that's going on. Silver is a mad dog animal. It basically goes up and down pretty damn quick. So if you get some crazy gains on silver, it's probably smart to sell some, because silver is something that can move in real incredible amounts once it starts taking off. So, you know, it's not going to have it's going to have a limit though. But you know, here's some indications, and I could say this: Senate Majority Leader Harry Reid, Democrat, Nevada, said like a few days ago that the current 16.4 trillion legal limit on federal debt must be raised in the next few months by another 2.4 trillion. Now, contrast that with the Republican Speaker of the House, Representative Bonner. He said that they're not going to cause, they don't want to have any of the Bush tax cuts expire for the rich people or whatever, but I'm not going to get into politics. But, you know, when they made this mandated fiscal cliff deal, what happened was they were just pushing things off till after the election with like, yeah, we're going to resolve it. It's going to have to happen. It's a bunch of BS. They are going to continue to spend. And that only means one thing: bad for the U.S. dollar. I know gold is manipulated somewhat, so is I'd imagine it's probably manipulated a lot, and also silver and a lot of different things that are on the spot market. But it ain't going to be that way forever, and because there's a global market out there, and there's a lot of other interests that are going on. So hard assets are going up in price for the most part, especially gold and silver. There's absolutely no doubt about that. The cliff is not going to occur in gold. That's all I have to say. It's definitely not going to occur in gold. I don't even think it's going to occur in silver at all, or even the other two precious metals that we commonly know as platinum and palladium, even though they're highly industrial. I don't think it's going to occur in there. There's probably going to be a lot more investment into those areas also, and that's going to keep the prices up. The reason being, they're not going to stop spending money. They're not. There's too many other indications out there. The senators talking about, you see, the only thing they did all that as mandatory fiscal cliff rules for was to postpone things mainly till after the elections. Already, look what they're doing. They're backtracking on it, even though it's mandated by law. So expect the one thing that maybe hit a cliff might be the U.S. dollar. It's not going to hit a cliff, but that is going to be the thing that's going to start taking a hit. Plus the equities markets, because there's going to be a general slowdown in the economy. But you know, if the equities markets take a hit and the dollar's taking a hit, that's that much. The money has to go somewhere. The money has to go somewhere. The dollar index is likely not going to, well, it could maybe stay afloat a little bit longer, the index itself, but that is only because the euro is looking that much worse. But I think the dollar versus like yen, even though yen is having more quantitative easing and the Swiss franc is probably not going to do that well. But there's too much dollar, there's too many dollars out there to go into the Swiss franc or yen. So there's going to have to be other areas it's going to have to go into. So hard assets are on their way up. That's all I have to say. There's absolutely no way around that. The fiscal cliff may not be a solid cliff where it's going to go right off the edge, but it's going to be a series of events, and that's all. It's going to be a series of events to the dollar. The only thing I could see where there's going to be some really hard pullbacks in the metals is when they start raising margin requirements again. You know, when they get up so high, they'll play that game again. There's absolutely no doubt that they will. They'll do that. I know they will. Because there's everything, they need to do everything in the world to keep the metals down. But once people start figuring this out, eventually they will. The metals really are going to take off like crazy. But I say there, even though we're coming up in a situation where there's going to be a recession in 2013, the fact that they're going to be breaking all their mandatory rules, they're going to keep raising the debt ceiling. That's not making the dollar the safe haven of the world no longer. It's going to really be a big push for gold. As a matter of fact, when gold took that big hit about a week ago, buyers were out there like crazy, including central banks. So there isn't that much gold in the world. So I mean, at the prices that we have today, there isn't enough. There isn't even that much of that. I mean, there's a lot more money that can go into gold because there's a lot more of it available than silver. You know, when you figure the dollars and the ounces available. But still, there's not enough of it for all the dollars to jump into, unless it was like at $50,000 an ounce or some crazy number. It really would have to be something crazy like that to make all the dollars jump into gold. So, but I mean, it's not going to go like that, but I mean, it's going to start moving up. There's no doubt about it. That's the only safe area to watch for, especially is gold. And the silver's going to take off too. There's no doubt about it, because as that ratio changes, it's actually going to move up faster than gold at different points in time. So have faith. Have faith. The fiscal cliff is actually good news if you're in the precious metals. That actually is a fact.